Straight into business now. We're going to focus on one of the items included in the military aid bill voted by the US Senate on Tuesday night, a measure that could lead to a real ban of social media app TikTok in the country. Sean Pellegrin, our business editor, is on set to tell us more, Sean.
That's right, Stuart. US senators from both parties approved this measure that would give the Chinese-owned short video app nearly a year to either sell its US business or face a ban. It's now headed to Joe Biden, who said he would sign it into law. Well, as a reminder, U.S. lawmakers are concerned that user data could be collected by the Chinese government as the app is owned by Beijing-based tech group ByteDance. They're also worried the tool could be used for influence purposes.
So what would it mean for TikTok then as a business?
Well, as you can see in this graphic that we're going to have on the screen here, the U.S. isn't TikTok's largest market, but it's still one of its most important ones. There are about 170 million monthly users in the country, 190 in North America, only a fraction of the billion or more users worldwide. The issue with not being on the U.S. market is not having access to the country's deep-pocketed advertisers. And if another platform, let's say Meta's Instagram Reels, takes over that space, it could lead to advertisers and content creators in other markets moving to rival U.S. platforms as well. TikTok also has big plans for its U.S. marketplace, the TikTok Shop, predicting it would grow tenfold this year.
Yeah, perhaps not surprisingly, the company promising to fight back in the court, Sean.
ByteDance does not want to sell TikTok and does not want to give up the algorithm that has addicted so many social media users around the world, and it will do everything in its power to stop that from happening. Just to give you a sense of how much they're willing to put into it, we can see that in the amounts that they've spent on lobbying in Washington. $8 million last year and already $7 million so far this year, including over $2.5 million on in-house lobbyists at TikTok and $4.5 million on TV and an ad campaign. So they'll bring a lot of that power to legal battles now, arguing that forcing the sale of TikTok or banning it would go against the First Amendment rights of users, those related to free speech. It's also important to note that the Chinese government has also said it would not allow a sale of TikTok.
Let's move to some company news for you now. Tesla has just released its latest quarterly results.
And the electric car maker saw its profits cut in half amid falling demand and mounting competition, particularly from cheaper Chinese brands. Investors have been calling for Tesla to roll out cheaper models to better face that competition. Now looks like that is what the company plans to do, despite having retreated from earlier plans to launch a low-cost model. Brian Quinn has the details.
A rough quarter for the world's leader in electric vehicles, as Tesla reported revenues for the 3 months to March had fallen by 9%, their biggest drop since 2012. Profits down 55% from a year ago. The financial results follow Tesla's worst quarter for deliveries in more than a year. CEO Elon Musk attributing the slide to weakening demand for EVs worldwide.
The EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market.
Tesla has also faced increased competition from a flood of cheaper models by Chinese brands like BYD and NIO. Worried investors have been clamoring for a low-cost Tesla model to meet that competition after reportedly scrapping plans for a new Model 2 that had been expected to cost around $25,000. Musk now says Tesla will be starting production on more affordable new models by early 2025 using existing manufacturing lines. That news saw shares jump in after-hours trading. Prior to the announcement, Tesla stock had fallen by some 40% so far this year. The company has announced plans to cut 10% of its global workforce, including 6,000 jobs in Texas and California and 400 in Germany. The results come amid an ongoing legal dispute over Musk's record pay package, initially estimated at $56 billion. Tesla is now calling on shareholders to reapprove that package and endorse the move of the country's corporate headquarters from Delaware to Texas.
Brian Quinn there. So end then, Charles, with a look at the markets for us.
It's mostly positive across the board at the open in Europe. As you can see, the European bourses following in the footsteps of Asia and Wall Street, and its two-day rally on the back of strong corporate earnings there. The FTSE in London really leading the gains over 0.4% higher. The FTSE in London obviously yesterday beat its intraday, its record in the middle of the session yesterday.
Charles, thanks so much. Charles Penny with Business.